Hello and welcome to a brand new episode of the OpIndia Recap. Thank you again for watching. Thank you again for joining us. We appreciate you. Did you know that India is about to come to an end? Did you know that the government is about to take all of your money that you've deposited in banks, take it, and just eat all of it? What the government has done is through demonetization, they have taken all your money into the banks, and now it is about to take all of those deposits and just take off with it. Well, that's obviously not true, but that's what is being insinuated in the media these days. And that's what's being insinuated by a lot of influential people in recent times as well. So let's go about it this way. Let me give you a little bit of a background of this whole issue, and let me break down some myths and some misinformation and some outright lies that are surrounding this issue. So the government is looking to introduce a bill into the winter session of the parliament. It's called the FRDI Bill, the Financial Resolution and Deposit Insurance Bill. So what used to happen was before 1991, all of the banks are of course public banks, and so the risk of failure of these banks was minimal because, the government would bail them out using taxpayer money. Now, as the market has expanded since 1991, as the size of the economy has grown exponentially, as the GDP has grown exponentially, these banks and financial institutions have become larger as well. So, of course, as these banks have been allowed to expand into the private sector, there's also a need for more regulation over there too. So various sector regulators were then born to kind of make sure that even in the private sector, these banks and these financial institutions are playing by the rules and what repercussions they're going to have if they do not play by the rules. Now, again, as the market evolves, this becomes more and more complex. And now in 2017, we actually live in a lot more interconnected financial system, not just in India, but globally. A great example of this was the 2008 Economic Recession, where because of one financial institution failing, there was a genuine risk of the entire system collapsing. So globally, around the world, there have been countries, including the United States, of course, where it first began, and throughout the world, countries have put in place systems where you could get early warning signs, and then those systems could actually predict these signs and then take steps to mitigate the problems, to make sure that the banks don't fail. And if they do fail, there's a good, proper system in place and a rule book in place to make sure that it is done in a proper manner. So the FRDI bill is actually the next step, is going to create an institution, an agency that is actually going to manage and create a proper rule book for these financial institutions throughout the country. So that financial firms like banks, insurance companies, stock exchanges, and payment corporations, if they are in ill health, this can be caught nice and early. And if they do fail, then at least they can be isolated and the effects of that bank's ill health do not spread to the rest of the sector. So the bill puts in place a process to monitor a firm that is classified as material or imminent risk to failure, giving the firm and the system time to either recover from the illness or, if it is going towards the terminal stage, to allow the system to prepare for failure. When you read the backstory, when you read the actual bill, and when you read what the bill is actually trying to do, this actually makes sense, because we've seen how these ad hoc agencies and how these ad hoc smattering of acts throughout the financial sector, how they actually behave. Because recently the insurance regulator tried to get ICICI Prudential to take over Sahara Life's operations. The RBI has always leaned on banks to take over failing banks. So there are these ad hoc systems in place, but there is not a overarching broad agency that can actually manage these affairs in a coherent and clear manner, which is what the government through this FRDI bill is trying to do. So listening to this kind of makes sense, right? But what has happened is that a lot of people in the media and a lot of media outlets and a lot of influential people on social media have picked up this one section from this 125-page bill, and they've created this giant ruckus over it. And they're insinuating that through this section in the bill, the government is actually trying to capture and take all of your money that is being deposited in the banks and actually trying to bail in these banks in case these banks get sick or in case these banks reach failure. Now, I believe that there are two kinds of people that are propagating this controversy and that are propagating these falsehoods. The first kind of people are people that have good intentions at heart, but are just misinformed and have not done the proper research when it comes to this issue. The second type of people that are trying to propagate this misinformation are people who, for one reason or another, just do not like this government, just have a deep-seated hatred for this current government, and whatever they can do to dent the credibility of this government, they're willing to do. Now, that is wrong. That is something that needs to be countered. That is something that needs to be rebutted. And that is something that we are trying to do at OpIndia with this video. So of course, there's a lot of people who are involved in propagating this controversy and propagating this misinformation. We're going to look at three of these sources. We're going to look at Ravish Kumar, the uncontested, undisputed conscience of India. We're going to look at Mr. Vinod Dua, who does a very popular video series through the Wire's YouTube channel. And we're going to look at a gentleman called Mr. Dhruv Rathi, who also runs a successful YouTube channel and commands a large audience. So all three of these people have been kind of saying the same thing, that with this act, the government can now decide what they want to do with your deposited money. They can decide to give you some of it back, or they can decide to keep all of it. And there is absolutely nothing that you can do about this. So let's play you a little clip of what they've been saying, and then we're going to offer a rebuttal to it.
बैंक के कस्टमर्स के द्वारा डिपॉजिट किया गया पैसा डूबते हुए बैंक को बचाने के लिए यूज होता है, तो इस चीज को बेल इन कहते हैं। और जल्द ही इसमें आपकी कोई मर्जी नहीं रहेगी, चाहे आप ये करना चाहें या ना करना चाहें। आपका कितना पैसा यूज किया जाएगा बैंक को बेल इन करने के लिए, अब ये सरकार डिसाइड करेगी।
बैंकों को नई छूट दी जा रही है, वो ये कि आपका पैसा लौटाएं या नहीं बैंक तय करेंगे। अगर लौटाएंगे तो किस रूप में बैंक तय करेंगे। हो सकता है कि बैंक लंबे समय के लिए निवेश कर दें और हाँ, आप काम से गए। बेल इन नाम से एक प्रावधान है जो प्रस्तावित रेजोल्यूशन कॉर्पोरेशन को अधिकार देगा कि वो बैंकों की लायबिलिटी को रद्द कर दे, यानी या तो बैंक लंबे समय तक के लिए निवेश कर दे आपका पैसा, या आपको दे ही ना।
कंट्रोल उदय संभालिए। So let's look at this allegation. Is this allegation true that the government can take your deposited money and do with it as it wishes and there's nothing you can do about it? Is this true? The simple answer, no. So coming to the FRDI, talking about the FRDI in this controversial Section 52, this is what the section says. The corporation may, in consultation with the appropriate regulator, if it is satisfied that it is necessary to bail in a specified service provider to absorb the losses incurred or reasonably expected to be incurred by the specified service provider, and to provide a measure of capital so as to enable it to carry on business for a reasonable period and maintain market confidence, take an action under this section by a bail-in instrument or a scheme to be made under Section 48. So what is Section 48? Section 48 details the method and time of resolution and provides for all possible means to ensuring that the depositor's money is safe. It calls for transferring the whole or part of the assets and liabilities of a specified service provider, or creating a bridge service provider, or merger or amalgamation of the specified service provider, as well as the acquisition of the specified service provider in whole or part. So in other ways, that Section 48 is actually trying to make sure that the deposited money that the depositor put into the bank is insured and is kept safe no matter what. Now, people are using this Section 52 to say that the government is going to take all of your money, but if you just read Section 52, if you read past the first paragraph and actually read what Section 52 says, it's going to show you that what they're saying is completely untrue. Because in Section 52, there's a subsection 7, which clearly states that this section will not affect any liability owed by a specified service provider to depositors to the extent that such deposits are covered by depositors' insurance. Subsection 7A clearly states that any liability owed by a specified service provider to the depositors to the extent such deposits are covered by deposit insurance. Now there's subsection 7E of Section 52 talks of not affecting any liability so far as it is secured, thus covering all secured deposits. Subsection 7F takes care of the liability owed to employees or workmen, including pension liabilities of the specified service provider, except for liabilities designated as performance-based incentives. So not only will it protect the minimum deposited insurance that you deposit in the bank, but it will also protect the liabilities that the failing banks, by the way, owe to the employees of the bank. And not just that, there's also extra protection provided in the bill for these deposits. Section 55, subsection 2 clearly states that such cancellation of the deposit can only be done if the consent has been given from the depositor. So this subsection clearly states such liabilities may be cancelled where the instrument creating it contains a provision to the effect that the parties to the contract agree to the liability being eligible for a bail-in. So without your consent, this deposit will not go anywhere. And I'm going to give you a little tiny hint about why your deposits are actually insured under this bill. This bill is called the Financial Resolution and Deposit Insurance Bill. Why would a bill that has deposit insurance in its name not give you deposit insurance? So the allegation that the government can do whatever it wants with your deposit is false. Now, there is more misinformation that is being propagated by various sources in the media and various people on social media. One of them being Mr. Vinod Dua, who's doing a popular web series now on the Wire YouTube channel.
आपका जो सेविंग अकाउंट है 1 लाख रुपए तक तो उसकी इंश्योरेंस है, उसके बाद जितने भी पैसे हैं उस पर वो आपका अधिकार नहीं होगा। उस पर बैंक का अधिकार होगा कि अगर कंपनियों को लोन देना है, उद्योगपतियों को लोन देना है, कर्ज देना है, क्योंकि उनकी फैक्ट्रियां बैठ रही हैं, धंधे चौपट हो रहे हैं, तो आपका पैसा उनको दे दिया जाएगा।
So he's saying that your deposit money can actually be taken, which again you have no say in, which we've already proved is false, that your money can be taken and given to, loaned out to businesses. Nowhere in this bill says that your money can be taken and loaned out to businesses. This bill is specifically created so that financial institutions can be bailed in, not businesses, just these financial institutions like banks, like insurance companies, like stock exchanges and things like that. So this claim by Mr. Dua, again, is false. Now, the other bit of misinformation that is being spread, of course, is that there is no minimum insured amount. So the government, if they want, can give you 1 rupee, or if the government, if they want, can give you nothing and just take all of your deposited money and give it to bail out banks and bail in banks and things of that nature. And then Mr. Vinod Dua also is propagating the same thing. He said that right now, as of this moment, your money that is above 1 lakh rupees is going to be taken and is under the control of the government, and they can take it and do whatever with it as they please.
इस वक्त आम आदमी के पैसे के साथ जो 1 लाख से ऊपर है छेड़छाड़ होने जा रही है, बैंकों के कंट्रोल में आने जा रहा है।
जब ये बिल पास हो जाएगा उसके बाद गवर्नमेंट डिसाइड करेगी आपको कितने पैसे वापस मिलने चाहिए। कोई मिनिमम इंश्योर्ड अमाउंट नहीं है इसमें। गवर्नमेंट चाहे तो आपको 2 लाख रुपए दे सकती है वापस 10 लाख के, या तो आपको 1 रुपया वापस दे सकती है 10 लाख के।
Let's look at these allegations. Is this true? Is this true that your money right now is being fiddled with by the government? No, it's absolutely not true, because right now the bill hasn't even been tabled in the parliament. So there's nothing that the government can do about it right now anyway. The bill is going to be tabled in the winter session of the parliament. Secondly, coming to the whole, there is no minimum deposit insurance and the government can take as much money from your deposits as it wants. Is that true? Let's look at that as well. So under the Deposit Insurance and Credit Guarantee Corporation, your minimum insured amount with your deposits was set to rupees 1,500 in 1961. Now, this amount was revised in 1993 and it was set at rupees 1 lakh. So the insured amount in your deposits was increased by 66 times in 32 years. Now, the resolution corporation that is going to be formed under this bill is also going to look at insuring these deposits, and the insured amount will be set after consultation with the RBI, with the Reserve Bank of India. And most likely it's going to be adjusted for inflation, so most likely it's going to go up. There have already been reports saying that the insured amount, the minimum insured amount, is actually going to go up significantly. You know, adjusting for inflation by judging that the amount was raised by 66 times in 32 years. So in 24 years, I think it's very safe to assume that the amount will go up quite substantially as well. The Resolution Corporation is going to set up a minimum deposit amount. We've already shown that previously in the video, and that minimum deposit amount is actually going to go up under this bill. So the claim that there's no minimum amount and the government can do whatever with your money is false. All right, so the next bit of misinformation that is being spread on social media and that is being spread through the media is that the money that you have deposited into the banks, that money will be turned by the government and by the banks into a fixed deposit, and will be put into a fixed deposit, and you will not be able to withdraw that money for a very long time. And the people in these videos have been saying the same things as well. So let's have a look.
तो आपका जितना भी डिपॉजिट अमाउंट है वो उसको फिक्स डिपॉजिट में चेंज कर दे, उसे लॉक कर दे कि अगले 5 साल तक आप उस डिपॉजिट को बाहर नहीं निकाल सकते, उसको पूरी तरह से बेल इन के लिए यूज कर ले।
आपके सेविंग्स को फिक्स डिपॉजिट में बदल दिया जाएगा या इक्विटी शेयर्स में बदल दिया जाएगा, और फिक्स डिपॉजिट में अगर बदल गया आपको 5% का ब्याज मिलेगा, लेकिन आप विड्रॉ नहीं कर सकेंगे।
कंट्रोल control, Uday.
So as you can see, they're saying that they'll put it into a fixed deposit. You will not be able to withdraw it for a long time. And what they're failing to mention here, what they are either failing to mention through ignorance or failing to mention through deceit, is that this will only and only happen if the bank fails. Right now, before this bill, if the bank fails, your money and that amount is completely lost. That amount above the minimum insurance, that amount is completely lost. With this bill, it's going to be different, because with this bill, that money above the minimum insured amount is actually going to be put into a fixed deposit. So the bank still owe you that money and you can still earn interest of that money rather than that money being completely lost. Now, this is a very crucial bit of information. This situation will only arise if the bank fails, not otherwise. Now, not using this bit of information or skipping out on this bit of information is actually leading to this panic, is actually designed to create panic in people. And that's not right. Media houses and people with such large followings actually have a bigger responsibility based on the big followings that they have. Because any information that comes from these sources is going to get to a lot of people. And then if it's designed to create panic, then it's going to create panic among a lot of people. So again, like I mentioned, this will only happen. It will go into a fixed deposit only if the bank fails. And let's look at how frequently banks fail in India. So in 70 years of Indian independence, no public sector bank has actually failed. In most cases, if a bank's health deteriorates, the RBI is going to step in, and then the RBI is going to order it to merge with a bigger bank in order to save the depositors' money. So this shows that the likelihood of a bank failing is actually very remote and very slim. But the FRDI plans to form the Resolution Corporation to make sure and to catch these things early if a bank's health starts deteriorating. And if a bank is going to fail, then set these ground rules in place and ensure there's a proper process to it so that the depositor's money is safe. So if you actually look at the bill in its totality, it's actually better for depositors than the status quo. You're actually going to get more minimum insured amount. It's going to be substantially more than 1 lakh rupees. If a bank fails, the money that is above your insured amount is not going to just disappear into thin air. It's going to go into a fixed deposit and you can actually get interest off of it. So that money the bank still owes you, which is not the case right now. And then some people have also been raising this question, why do we even need the FRDI? Why do we even need a resolution corporation? And that's also a kind of a strange question, because that's like asking, why do we need to build a 8-lane highway when we already have a dirt track? Because this question is kind of assuming that India is always going to stay around that 2 trillion economy mark. India is actually not going to become a bigger economy. And it is. You know, in 2040, it is estimated that Indian GDP is actually going to become bigger than the US GDP. So as the Indian economy becomes bigger, as banks become bigger and get into more and more of private sectors, there's going to be a need to be able to regulate these things better. There's going to be a need to have a body rather than these smattering of ad hoc bodies. There's going to be a need to have a body that can actually regulate this whole entire process properly so that people's money is safe and people's deposits are safe. Also, just think about it. Just think about it logically for a second. What kind of suicidal government is going to put a bill in place that allows the government to just take all of the deposits that people have put into banks? I mean, I know governments do stupid things, but this is not stupid. This is suicidal if this was true. There's this kind of insinuation among many people in the media and many people on social media that there is this diabolical conspiracy that the Modi government is involved in, where they used the Jan Dhan Yojana to give poor people bank accounts. Then they did demonetization to put everybody's money into the banks. And now they're using this FRDI scheme to then take everybody's money that they have deposited into the banks and then just gobble it all up. That's a very insidious and false claim to make. And it's very important that we fight that. It's very important that we counter that. And that's what we're trying to do through this video here. I really hope you found this video useful, and I really hope that this video helps clear up your doubts about the FRDI bill and about the Resolution Corporation. And I hope this video helps dispel some of these misinformation and some of these falsehoods being spread through the media and being spread through social media like wildfire. So if you found this video helpful, please make sure to like this video. Please make sure to share this video. Please help us spread the truth, and please help us stem this tide of misinformation that is being spread through the media right now. Again, thank you very much for watching today's show. Again, like I said, like the show, share the show, subscribe to the OpIndia YouTube channel. I have a YouTube channel of my own. It's called The Sham Sharma Show. Please check that out on YouTube as well. The link to that YouTube channel is provided in the description below. I also want to just take a second and thank the people at OpIndia for the incredible research that they have done on this article that has really helped me out in this video as well. Again, thank you very much for watching today's show. You've been recapped. I've been Sham Sharma, and I will see you soon.